Welcome to the Private Markets Whisperer. I'm your host, Peggy. So today we will address a basic but hyper important question when you start investing in private markets. What is your investment thesis? In other video, I explained already how to source deals as you start investing in private markets. So if you have not watched it, check it out. I am a firm believer that you need an investment thesis, whether you're an institutional investor, meaning a professional investor, a family office, a super angel, or a business angel. Your thesis as a retail investor will not be as formalized as a VC, but you should have some guidelines, especially as you start investing in private. As you get more experience, you can expand your investment criteria. So I will focus on some of these top criteria you need to take into consideration. So first, what stage do you want to invest in? Usually your budget will drive part of this answer. If you are a business angel, you will likely invest at the very early stage of the company life cycle, such as pre-seed, seed extension. And I will record other videos to explain the difference between that. And you would do that simply because as companies grow, the checks required to invest also grow, and it becomes inaccessible to most investors. So institutional investors or professional investors are likely to be the only ones investing at the latest stage of a company development. So for you, what stage do you want to invest in? If it's smaller check, as it's usually the case, you're likely to go at the early stage. Second, in what geography do you want to invest in? Proximity tends to be highly valued with private investors, so they can step in and support the company if necessary. Depending on where you are located, the opportunity to invest can be more or less abundant. In North America, we have a lot of opportunities. Elsewhere, it might not always be the case. So you might have to expand your radius depending on where you're based. You might also want to invest in other geographies so you can get exposure to certain area of expertise or to certain end markets. So access to deals and tax impacts might also be taken into consideration when you select your geography of predilection. Obviously, some impact on tax might make some geography a bit less exciting. So several factors can influence the geography you decide to focus on, but you need to know where are you going to invest. So what stage, what geography? The third criteria is what industries do you want to invest in? And I tend to recommend in industries you know well, especially as you start investing in private markets. First, it will be easier for you to do the due diligence because you understand the industry. Second, you would be able to provide support to the company if necessary. Also, if it is a competitive deal, meaning if the deal is oversubscribed, and in other words, if the demand to invest is higher than the supply, your expertise will differentiate you from other investors. So you're more likely to be selected to be able to invest. So you should get one or two levels down from the industry. So if I take my example, my expertise lays in financial services, and I focus on B2B software for the financial services, so fintech industry. And I have a preference for asset and wealth management. So I recommend you to look at this different level of expertise. So what stage do you want to invest in? What geography do you want to invest in? What industry do you want to invest in? So you can start actually really focusing on the right deals for you. And you can also have additional parameters. Diversity and inclusion, socially responsible investing. So these are filters you should absolutely add to investment thesis. I always look when I invest, what is the situation in terms of gender balance, racial balance, and all that great stuff. So I end up with companies that reflect my value. So this investment thesis is very important, as it will allow you to avoid being distracted by shiny objects. You're going to receive a lot of deals. If you don't have already your criteria selected, you're just going to go all over the place. So you need this criteria. And that really be useful for you to qualify your investment, and so you don't waste precious resources on deals that don't make sense for you. Some investors also put another criteria based on valuation. So they put valuation limits. So the maximum valuation they're ready to invest in. I personally don't like that. Valuations are highly subjective. They depend on industry, geographies, founding team, lead investors, the terms. Anyway, so many things influence the valuation. So I find it difficult to have a hard and fast rule. But again, some business angels group put a top limit for the valuation and will never invest above that. So that's your call. So now that you have a better understanding of why you should an investment thesis and how to develop an investment thesis, the next step for you is to watch more videos on deal sourcing, but also due diligence. They're really key steps for you to be successful. So if you have not subscribed yet, please do so. Unleash your private investor and take care and keep investing.